Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the quick take on the markets. We'll try to make it as quick as possible to talk about the big happenings of the day, try to break it all down, why it happened, what happened, so you know. All right, thank you for joining me. I'm glad you're here. And if you do have a question, because that's the most important thing, the whole reason why we do a live stream is to answer your question. So if you do have a question, leave the ticker symbol and your question in the comments. We'll go over it live during the show. Okay, the S&P 500, boy, oh boy, it rally 2.5% on Thursday as earnings reactions helped to instill confidence in the, quote, maybe dip buying efforts. The Nasdaq rose 3.1%. The Dow Jones rose 1.9%. And the Russell 2000, it rose 1.8%. After a shaky start in which the major indices, all except for the S&P 500, turned negative earlier in the morning, the market kicked into higher gear in the afternoon. All 11 of the S&P 500 sectors closed higher, with gains ranging from 1.1 on the low side with utilities to 4% in the information technology sector. Meta Platforms, boy, did that thing surprise everyone and come out of left field. FB is the ticker symbol still for now for Meta Platforms, formerly known as Facebook. It popped big time today, 17.59%. It had sort of a halo effect on the other mega caps as shares, they surged. Look at this, 17.59%, following its better than feared earnings report. Yeah, apparently Meta Platforms is going to focus on earnings again and not so much about the metaverse, I guess I could say. Apple did report in the after hours, AAPL, along with Amazon, and I'll mention both of them. Apple is down 4% in the after hours. Now, Apple did beat its top and bottom line, driven by iPhone sales. They also beat on margin. They hiked dividends by 5%, and they're increasing their share repurchase program by $90 billion. All of that to say, they did a pretty good job and had a good earnings report. Now, guidance is the kicker. And that's why you find Apple down 4.28% in the after hours. Now, Amazon also reported after the close of the market today, after the bell, if you will. AMZN is the ticker symbol for Amazon. Amazon has fallen sharply, 10.27%. It is down in the after hours. It's not good, folks. Now, with Amazon, after what they reported, their operating income came in below expectations for Q1. They also set, I guess, what I would say, a cautious guidance for Q2. So the cloud's growing, but consumer spending is slowing. And Amazon is seeing that directly. Now, is it because consumers are going to physical locations to purchase goods? Maybe. But most likely, because we got GDP numbers today, at least the initial GDP reaction, contracting. That's right, contracting for the first time since the pandemic began. So what Amazon is seeing is less shoppers out there. All consumers are wondering what's going to happen in the future, so they're saving their money right now, not spending it. So the economy is slowing. Now, Qualcomm, they also had some results and guidance. Ticker symbol is QCOM for Qualcomm. Their results and guidance had a similar effect on the Philadelphia Semiconductor Index. They were up 9.69% during regular session hours, down 1.95%. Remember what I said earlier this week. You're most likely going to see in the markets now selling into strength, right? Selling into strength. So when a company is up nearly 10% in a day off of good earnings, good guidance, you're going to see profit taking earlier than you would normally see. That's why they're down 1.95% in the after hours. Now, the Philadelphia Semiconductor Index, that thing popped 5.6% today. It was a great day. Great day. Another surprise, just like Meta Platforms, was PayPal, ticker symbol PYPL. Now, we have discussed PayPal extensively on the channel. And wow, we thought it was a good buy at $190, $200 a share. This thing, man, oh man, yesterday it closed at $82.61 a share, right? It popped 11.48% today, broke back above $90. Why? Why did it do that? Despite its downside guidance, it was viewed as a justification to buy beaten down growth stocks. Yeah, except for one, which I'm going to mention in just a second. But look at this. This is just proof of that selling into strength mentality that the market is going to have for quite some time. PayPal up 11.48% during regular session. They're down 2.6% in the after hours. Selling into strength. It's going to be a main driver, a main thought process, a main strategy being used in the market. Now, like I said with PayPal in their earnings, it was a sign to buy oversold, beaten down growth stocks, except one which took the opposite direction. Rest in peace, Teladoc Health. Ticker symbol TDOC for TDOC, Teladoc Health. Can you imagine how much they dropped? It's on the screen. It might be kind of small to see. Look at this gap down for Teladoc Health on their earnings today. This is a gigantic hole. They dropped 40%, 40.15%. 40.15%, all on disappointing guidance, right? Doctors' offices are opening back up. That means patients are going to see their doctor instead of look at them on the screen of their phone or computer or what have you, right? Well, some patients, like me, for example, being in a wheelchair, it's a lot harder to go to the doctor's office. So these virtual appointments that have become available since the pandemic began have been great for someone in my situation, but a lot of people like to go see their doctors to talk about this personal stuff happening to them. So with doctors' offices opening back up, while the telemedicine has, it's changed the way doctors, see patients since the pandemic began. And again, like someone in my situation, it's great. But for most people, they'd rather go to the doctor's office, see their doctor face to face, and talk about these things that are happening to their body that are very, very personal. So Teladoc, disappointing guidance, it catered 40% and down another 3.25% in the after hours. So I hope you were not in this one. Kathy Wood, were you still in Teladoc Health? Hopefully not. All right, some good ones. McDonald's, ticker symbol MCD, and Merck, but McDonald's load here. McDonald's up 2.85%, flat in the after hours. It's rising. Good earnings report. So they pleased investors. Now, Merck did the same thing. They pleased investors with good earnings report. And their earnings, or I shouldn't say earnings, but Merck and their ticker symbol is MRK. Let's go look at them right quick. Again, great earnings, up 4.94%, down a fourth of a percent in the after hours. So hanging around that 85.25, 85.22 area there. Really good. Both of those companies, they pleased investors with good earnings reports, and also one section of the earnings report that plays or has a heavyweight guidance also did well for them. Now, a fellow Dow Jones component, Caterpillar, ticker symbol is CAT, C-A-T. They did good with earnings, but investors did not reward Caterpillar. Down 0.7% during regular session and down 0.35% in the after hours. There's another one that investors acted like this on too. Also a Dow component, AMZN, ticker symbol is AMGN, and you'll see it again here, down 4.28% and flat in the after hours. Both of these companies, Caterpillar, AMZN, both closed lower despite beating EPS estimates. And AMZN, this is one of the ones that was doing really good for a while. I had it back here with a price target. You can see my price target was $260 a share. It never quite got to that point, but it definitely went on a nice run from its breakout here. This thing got to a high of $158.81. And then this resistance box, this yellow box here, this is the resistance area. And I do find it interesting that the company closed up here at $248, but then opened this morning much, much lower. There we go. Much, much lower at $235. So it dropped and then it fell much further than where it actually closed at today. It got to a low of $231. You can see that big wick down here. And then it tried to recover. It also has a big wick up top as well, but the candle isn't quite as big as that. But I do find it interesting that it stopped inside of this box. So that was a really good resistance box. We'll see how this thing reacts. All right, a popular stock, popular trading app, at least it was, it seems to be falling out of favor. Robinhood, they reported their earnings today after the bell. HOOD, Hood, is the ticker symbol for Robinhood. Now, they're dropping in after hours. They're down 11.3% in after hours. They were up 6.1% during regular session. But the reason they're dropping in after hours is their number of monthly active users fell again. They're not holding on to their users by any stretch of the imagination. And the average amount that each user spent also declined during the quarter. So not looking good for Robinhood. Oh, and one other piece of bad news for Robinhood, their earnings and revenue, both for Q1 missed the mark. They were down too. Okay, now back to the broader market here for a moment, and let's talk about this. Let's look at the chart here for the broader market. This is the S&P 500. It's a place I like to focus a lot on when we're talking about the market. But the market was simply due for a bounce. Just simply put, from an oversold condition, and this cannot be understated enough. Why did we get a bounce today? Because the market was extremely oversold. Same thing that happened on April the 22nd, before the little bounce that we had on the 25th. The market was oversold. And if it was oversold at that point, from yesterday's wild action in the market was oversold again. That could be why the market bounced, because it was way oversold. Look at the RSI before today's bounce. The RSI was at a 28.7 for the S&P 500. That is way oversold, and it's lower than it has been in weeks. On the S&P 500. The money flow index was also down 34.4. Oversold, way oversold. When you get these conditions in the short term, you're going to see bounces. Okay. Now, the market's going to continue to fall. We're going to continue to see selling into strength until the Fed makes its U-turn. Once the Fed stops being so hawkish, then we're going to see a massive run, okay? Remember the VIX? We pulled this up earlier in the week. Let's look at the VIX for a moment. Did I pull up the right one? There's two versions. Yep. No, this is not the right one. All right, let me go back in. VIX. You want to click on the CBOE in TradingView. There's also the TVC. That one works too. They're both the same, but I have my notes in the CBOE VIX, which is the Volatility Index, right? Whenever the VIX gets up to this level, okay, when it gets into this red circle area here, that's when the market will do its reversal. And guess what? The VIX has not quite made it to that mark yet. Typically, you know, the bottom of this, I guess you could say the average is a 34, okay? And actually, I'm going to put a second blue line here right at 34. When it gets to a 34, and I'm going to raise this top line up a little bit higher, so we have a really good, no, you know what? I'm going to leave it right there. Anywhere between these two blue lines, okay? When the VIX gets in here, that's when the VIX does its reversal. And if the VIX is doing a reversal and going down, that means the market's going up, okay? So when we zoom in here, you can see that the VIX 2 days ago, it touched the bottom, the 34 points here. The VIX touched the bottom of this zone and has reversed 2 days off of it. So where do we go now? Where do we go now? Well, it is possible to get another little rally, but tomorrow is Friday. And what have we seen? I'll go back to the S&P 500. Ticker symbol is SPX. And there is a link in the description of this video to a free account on TradingView. It's where we do all of our charting. Let's take the volume away for a moment. Let's look at the Fridays, okay? So last Friday was the 22nd. The 22nd, we had a major sell-off. The S&P 500 dropped 2.77%, okay? Before that was the 15th. Let's go to the 15th, and let's see what happened. 15th? Oh, that's right. That was a holiday. So we go to the 14th. That was a red day, down 1.2%. We go to the 8th of April, and what do we have? We have a red day, down 0.27%. And then before that was April 1st, and then that will cover all of April. April 1st was actually a green day, up 3.4%. I'm sorry, up 0.34%. So if we take out April 1st, every Friday in April has been a red day, getting worse each Friday as we moved along. So what do you think is going to happen tomorrow? And another question, why do you think every Friday, except for April 1st, we've seen a sell-off? Investors and traders don't want to have an open position over the weekend because headlines move the markets. And there's no telling what type of headline could come in over the weekend in this market that's setting up to be a bearish market. So we could see the gains we made today all disappear tomorrow. We could see it be a relatively flat day and hardly move. We could see an action-packed day with the markets going crazy like they did on Wednesday with these big wicks, but a tiny little candle. But every Friday so far in April has been red. Selling into strength is going to be a main driver of this market, and we had a lot of strength today. I'm not saying the strength can't continue. The strength could continue, but the probability is that the markets will most likely be red tomorrow based on our short little window of April that we have, with every Friday except for the 1st of April being a red day. So we could be giving this back tomorrow. We could just hang on and barely move sideways tomorrow. That's an option, right? So be careful with tomorrow, because again, like I showed you with these companies that reported earnings today, they did good during the day, sold off in the after hours because investors are selling into strength like we did at the beginning of the year. And that doesn't look good for a continued multi-day rally, especially being on a Friday. Can you explain what happened to Apple? Why did they guide down? Because the economy is slowing, right? GDP came in today. Well, the advanced numbers for the GDP, gross domestic product. The economy is shrinking. The economy is slowing down. The second half of this year is going to be a lot slower than the first half of this year. Apple is seeing that. All companies are seeing that. That's why Amazon is selling off in the after hours, because the economy is slowing down. Consumers are going to be spending less in the second half of this year than they spent in the first half of this year. That's the big number one reason why. Consumers are going to spend less as this year progresses, because the economy is going to be getting worse as this year progresses. That's the big reason why Apple is down. That's the reason why Amazon is further down than Apple, percentage-wise. And why a lot of companies that are retail-facing are down. Even with Google, advertising was healthy, but as the year progresses, it's going to slow down. It's going to be a bloodbath tomorrow. Yeah, I think the gains that were made today could easily be given back. Very easily. Tomorrow is a Friday, last day of the week. It is the last trading day of the month. That's a big one too, because remember, at the beginning and ends of months, there's a lot of rebalancing that goes on with these hedge funds, and that creates selling pressure. Options contracts expire at the end of the month. That creates selling pressure. So if you want to, hedge against this market in an easy, very easy way, all you have to do is use like an ETN. It's very similar to an ETF. The one I've been using all year is SPXS. That is the ticker symbol for the direction daily S&P 500 bear times 3. It's just like buying an ETF, but it is leveraged. So if the S&P 500 is down 1%, then this would be up 3%. So it moves very quickly. And you can see those days where the S&P 500 was dropping, April 21st, this was up 4.3%. April 22nd, this was up 8.3%. And then April 26th, this was up 8.5%. So this is an easy vehicle where when the market's going down, you can bet against it very easily when and going into one of these ETNs, which it tracks the S&P 500, but it's inverted, right? So that's one that I've been using all year for the S&P 500 as it drifts lower. And then there are the reverse of that. If you think the market's going up or the S&P 500, it's SPXL, which is the direction daily S&P 500 bull 3x, right? So when the market goes up 1%, this goes up by 3%. Like today, for example, this was up 7.5% during regular session, and you can see that people are taking those profits right away, selling into strength. This thing's down 2.5% in the after hours. So just a quick way to, an easy way, if you don't want to worry about options, which can be difficult and tricky to understand, these are much easier because it's just like buying a stock, a share of a stock or a share of an ETF. Very easy to use. All right, so moving on. There was also in the stock market today, it did not appear phased by the disappointing Q1 GDP report that had signs of stagflation. And remember, stagflation is when there's high inflation, high unemployment, and slow or negative real economic growth. Now, we don't have the high unemployment. That is completely reversed. So that's one of the check marks that you can't check off for stagflation, because the employment part of the economy, the equation, is really good right now. It's a good time to be looking for work. Real GDP also decreased at an annual rate of 1.4% in the first quarter. We're going to talk more about that in just a moment when we talk about the economic data that was released today. And there was a few signs that we can all bring together. Now, the Treasury market did react where the market didn't. And it reacted in such a way that suggests expectations for the Fed to focus on tighter policy to keep inflation pressures in check. The 2-year yield, we look at it every day, and you can do it on TradingView, US 02Y. That's what you can use to look at the 2-year. And I got my squiggly mark here because I think the 2-year, it could swing down a little bit. We got a little topping pattern here for the 2-year. It slowly crept back up over the past couple of days. The RSI on this is flat over the past couple of days because it's hardly moved. But it did increase by 7 basis points to 2.62%. You can see it there on the right-hand side. That's the actual number for right now. The 10-year also rose by 5 basis points. And we look at that on TradingView with US 10Y to look at the US 10-year. I believe this is going to 3%. And again, it almost tapped it on April the 22nd when it went up to 2.78%. It almost got there. But this rose 5 basis points. 2.83% is where it's at right now. And the US dollar index, which I don't usually talk about, but it's the measure of the strength of the dollar. How strong is the dollar? Well, the strength of the dollar hit a 20-year high today. So the dollar is really strong right now. And then, of course, WTI crude That settled above $105 per barrel, up 3.5% on the day. Let's see. Thank you for all that. You are very welcome. Every day the market is open. We are here in the afternoons to talk about it and share, whatever we can. Try to make sense of what's happening. All right, let's talk about let's dive into the economic data from today, because we got a few things. Now, the real GDP, that decreased at an annual rate, like I said earlier, of 1.4% in the quarter. While the GDP chain deflector, or deflator, I guess is not deflector, deflator. It measures the change in the prices of goods and services produced in the U.S. and what we export. Well, that shot up by 8%. That's 8% inflation. 8% inflation. That's crazy, right? I mean, we all feel it. We know inflation's high. 8% was reported today by the Fed. That's crazy. Okay, the real final sales of domestic product, the GDP, which exclude the change in private inventories, were down 0.6%. So the main takeaway from the GDP slowing, contracting, is that it will make concerns about the U.S. economy being at risk of slipping into an eventual recession worse, or at the very least, entering a stagflation period that will necessitate tighter monetary policy to get inflation under control. And as long as the Fed is fighting inflation, the market will go down. Once the Fed is done with being a big hawk and fighting inflation, that's when the market will finally start rising again. And that could occur in the next 3 to 6 months. If I had to put a time frame on it, the Fed's going to rate hikes 50 basis points probably this very next meeting, maybe 50 basis points after that, then maybe a 25 or 25 and start slowing down. And then 3 to 6 months from now, the Fed may decide to be less hawkish because maybe inflation has plateaued, or maybe it started to come down a little bit because of all the rate hikes. Because remember, every little bit that the rates are hiked, that slows down consumption. People aren't buying as much, and it slows down borrowing. It basically makes the flow of money slow down, right? Like if we were at Niagara Falls and the money is rushing over the falls. As rates go up, it's like winter slowly creeping into Niagara Falls and ice starting to form on the mist and slow the water down a little bit, right? Capture that mist and turn it into ice and freeze it in time. That's like what is happening right now before our eyes. So the next piece of data that was released today was the initial jobless claims for the week ending April 23rd. That decreased by 5,000 to 180,000. Continuing claims for the week ending April 16th decreased by 1,000 to 1.408 million, which is the lowest level since February 7th, 1970. The main takeaway from the labor report, from the jobless claims, they're at historic lows right now, which is a sign, I guess, of what I could say. It's a sign of a tight labor market. The tightest labor market, though, will continue to fuel concerns about wage-based inflation pressures that can feed into more persistent and broader price inflation. And remember, the Fed, all they're trying to do right now is fight inflation. And as they fight inflation, they hurt the markets. Okay, here's where we stand year to date. The Dow Jones is down 6.7% year to date. The S&P 500 is down 10% year to date. The Russell 2000 is in third place. It's down 14.6% year to date. And the Nasdaq is out of bear territory again. Let me put the Nasdaq up on the screen here. The Nasdaq, it's back out of bearish territory. It's got this line that it's making here. Actually, we can adjust this and bring it down a little bit. So the Nasdaq, it is making lower lows each time it goes down. Will it continue this trend? Yes, it will, until the Fed reverses. We all know this. But we look at this. Year to date, this thing has hit 20% 3 different times this year. But it is now down 17.7% year to date. Moving back up, right? Yeah, we've had that before. Our big snapback rally that we had here during the end of March. Can we get another one? I don't think so. Not until the Fed changes its trajectory and stops being so hawkish. Okay, well, that's everything that I wanted to talk about. Thank you for your questions. I greatly appreciate them. That's what we're here to answer. Every day the market is open, we are here to answer whatever questions you may have. Just leave that ticker symbol and your question in the comments, and either we'll talk about it live during the show, we'll talk about it during our next live stream, or we'll make a video about it and talk about it that way. So thank you again very, very much for joining me. You are incredibly awesome. And I love your company, and I love you being here. All right. Thank you guys so very much, and have a good day tomorrow. But remember, it's a Friday. The gains we had today, maybe give them back. All of them, plus some. It's the last trading day of April, which also will provide selling pressure. So I'll be interested to see how bad it will be, right? Okay. Should I get my son's 529 into cash next time? Okay. Yeah, I'll do a little research on that 529 and see. Be careful for tomorrow, with it being the last trading day of the week, the last trading day of the month. Every Friday thus far having selling pressure and being in the red, except for the very first Friday of April. Tomorrow could be a rough day in the market, so prepare for that one. All right. Thank you, ladies and gentlemen. And I'll look into the 529 a little more, do a little more digging and research on that. Maybe find a clearer answer to that question about what to do with it. But right now, I'm leaning towards what I said earlier about holding on and not selling at the moment. But we can talk about that. I'll refresh my memory on a few things, details about it. So we'll talk about that one tomorrow after the market has closed. All right, guys and gals, thank you so very much for joining me, and I'll see you in the next video. Thank you.